Hello and welcome to a Purple Chips tutorial webinar. I'm John Schwinghamer, the author of Purple Chips, published by John Wiley & Sons and available everywhere. Before I start, I'll go into my disclaimer. The information contained in this presentation is based on the criteria of the Purple Chips model and is not intended to be a solicitation to buy or sell securities or investment advice. This presentation has not been approved by the author's employer. The information contained herein is believed to be accurate but cannot be guaranteed. Stocks can be risky and you should consult a professional before investing in the stock market. Now let's move on to our tutorial today, which is about discipline. Very important consideration in making money. First I'll summarize the key points. With discipline, discipline is one of the key ingredients in succeeding in the stock market. You have to follow the plan. You really got to put your emotions aside. Your entry point is probably one of the most important factors also. And the last point, improving quality is okay, and I'll explain what I mean in a second. Now, I'm going to use two companies for examples this morning, Oracle and Aflac. Oracle, symbol ORCL. The reason I bring this up is that discipline is something I was thinking about yesterday. Today it's August 23rd, 2012. We're coming up to the U.S. elections this fall, and obviously with the elections there's quite a bit of uncertainty that will be coming into the plan here, and uncertainty is never a good thing for investors, and so most people will have a tendency to seize profits or take losses or whatever and reduce their exposure to the market, and so in effect we'll have a risk-off scenario when there's a lot of uncertainty. So I was going through my various positions, and these two really came to mind here, and it made me think about discipline. So we've got Oracle, ORCL, and I'll just show you what the situation is. I bought Oracle based on the Purple Chips model when it was around 27 or 28. I still own it, and I was looking at my various positions and thinking, well, should I take the profit in Oracle or should I hold on to it? I bought it around 27, 28. My objective, you can see I'm moving the EPS line here, the objective is around $30, so $38 if in the next 12 to 18 months Oracle goes up. It may go higher because the earnings could continue higher, and so then in that case, you know, the target could be even higher than the $37, $38 that I'm looking for. So my question when I talk about discipline is, should I take the profit? Right now we are at 31.70. Okay, you can see the last trading price is up here on this chart. Here I just circled it here, 31.70. I bought the stock at 27.28, and so the question is, do I take the profit? And the answer is, after reflecting on this and thinking about discipline, the answer is no. I should not take the profit. This is in the top 25 stocks for the Purple Chips model. This stock is an excellent stock. My entry point is unparalleled. Okay, I bought it at 27.28. What are the chances of me being able to buy it down here? It's very unlikely. It'll be unlikely that I could buy it at anywhere under what my original entry point is. I'm only making about $4 or $5 a share right now, which is not enough. Okay, the upside potential is considerably larger. So this is where discipline comes into play. You have to follow a plan. Okay, so I'm going to put my emotions aside and follow my plan. The stock may come back down this fall. It may come back down to 26, 27, 28, whatever. Doesn't matter. The upside is considerable. The market is full of surprises, and it is not unlikely that Oracle at some time in the next 12 to 18 months will reach my target. There's a high probability. So the best thing for me to do is not take the profit. That's to follow the plan and see it right to the end. That's the difference between making money, making a little money, and making a lot of money. Now, the next stock I'm going to talk about is Aflac, because that's the other one where it's the same sort of example. Here we have a stock that's in my top 25 Purple Chips, and you can see this has a beautiful earnings per share curve. There's never been a hiccup in the last 20 years or so, and my entry point is around 41, 42, And it's unlikely that the stock will get any cheaper than that. It may go down this fall if, with uncertainty, it's possible we could have some profit taking. But I'm going to take the chance because I have a very attractive entry point. You see, the thing is that the upside on Aflac is somewhere between $60, okay, which I'm pointing out here. I'm moving the earnings per share line. It could be $60. It might even be $70. If we go back to old valuations and the market stabilizes for whatever reason, it's very hard to predict where the market's going. The market could easily surprise everyone and go higher. I'm not saying that it will, but it's possible. So you might see Aflac, considering earnings keep rising and making new highs, Aflac could go in the 70s. So you've got to follow the plan. Now, the only time that I would deviate from the plan, okay, and we're talking about discipline here, the only time I would deviate from the plan is if I was upgrading quality. If I had a stock that was not in the top 25, and I was making some money, and I had a chance to buy a company that was in the top 25 that was at a low valuation, anytime I would take the profit on the other stock and move into the top 25. So I'm improving the quality of my holdings. So that's a scenario. That's the only time where I would deviate from the plan, and I would upgrade in effect. So I would take a profit on something to move into better quality. Anytime you can improve quality, it's always a good thing. So that is the conclusion for today's tutorial on discipline. I'm John Schwinghamer, the author of Purple Chips, and thank you very much for watching. And please don't hesitate to contact us if you have any questions. Thank you.